Let's turn to business news now with a very welcome return of Nona Peltier. People have been texting in and saying, "Where's Nona?"
That's lovely. Thank you so very much, and I'm back.
Yeah, well, we're delighted to have you back. Services sector activity has taken a significant tumble to its lowest level in, 5 years, but longer?
Yeah,
5.5 years?
Yeah,
What,
since December 2012.
What does it mean?
Well, actually, it's a fairly good indicator of where the economy is going when it's taken in with the performance of manufacturing index, which came out on Friday. It was also down. So these two surveys don't measure opinion. They measure actual output, business outputs.
Right, because we're bored of surveys measuring opinion.
Well, I guess some people are bored of them.
Well, the people who do them obviously are making a healthy living out of it, so good for them. But this isn't measuring opinion.
No,
this
it's actually output. So we're talking about things like, for example, in the manufacturing sector, we were talking about new orders, and employment. So are you going to hire people or whatever?
Okay, so this really is meaningful.
Just so reminding, on Friday we had it, and basically had fallen 2 points to a seasonally adjusted 52.8. Now, anything above 50 still says we're expanding. So that's not contraction of the industry. That's still expansion mode. So not to get too alarmed about it. We're still growing, but not as fast as we had been. And a drop of 2 is fairly significant. Now, that was a bit worrying. What was more interesting was that today we had the performance of services sectors, and that was really down quite a lot. It fell to 52.8 from 57.1 in May. That's a large drop. That's like, 5 points around it. Well, not quite, but up, it's quite a big drop.
And in percentage terms, it's a big drop.
It is a big drop. And that is more significant because taken together, it indicates that the economy, the momentum we thought was kind of moving about 3%, which was what the market's been expecting. This indicates it could be somewhere between 2 and 2.5%.
Really interesting. The last time the Reserve Bank said anything in public, they were kind of hedging their bets with, I thought, an expectation that we were going to start seeing figures like this.
Well, the surveys we've seen in business and confidence and so on, and consumer confidence, certainly indicate that we were going that way. But they're opinions, and so it's hard to know. But this is not measuring somebody's opinion. This is measuring somebody's actual output.
Right.
So if that's slowing down, that is more of an indication of where our economy's heading than somebody's thought about where it's going. And that could be quite concerning. So we'll have to keep an eye on that and see where it goes. I mean, it's just an early indication, but hey, something to keep an eye on.
Nona, Fletcher Building is making further changes to its top management. They're the gift that keep on giving, Fletcher Building, aren't they, for business reporters?
We have no shortage of stories on Fletcher Building.
No, amazing. No, sorry, I'm not making light of the travails of the poor old Fletcher Building shareholders over the past few years.
Actually, I'll tell you what. I was looking at the market today before coming down here, and it's a down market today. But there was a bright spot, and that was Fletcher Building. It rose 0.5% in a market that was otherwise down 0.5%. So this is moving against the market. And you might say, well, why would that have been?
Why would that have been?
And the reason is that they have a new chief executive for their troubled construction division. That's the one that lost nearly $1 billion through their sort of high-rise buildings. That's the convention center losses and the Justice Precinct. And that's been a real pain in the side of Fletcher Building. And so they got a new chief executive. And you might ask, who is he?
Who is it?
His name is Peter Reedy, yes. And he is the chief executive of Kiwi Rail. So he's been working with Kiwi Rail for the past 4 years and has been overseeing their negotiations with government. They're looking to get a capital injection from government. And that's not going to necessarily be concluded by the time he leaves in early November to take up his new position. He's also looking at developing a new 10-year strategy for the transport company. And that's in the works. So those two things are going to be left in the air a little bit. They've got a good leadership team that they say is in place. So maybe that won't be such a burden for Kiwi Rail, but certainly some changes there. The reason he was picked is because he's got a lot of experience in infrastructure, and that's something that Fletcher Building wants to focus on. So the market certainly like that.
Yeah. What else did the market? Well, the market didn't like much else today, did they?
Actually, not really, no, because China came out with their economic numbers, and while they were kind of in line with what the market expectation was, they were a little lower, just a slight amount. But when China is a little bit lower, it could be quite a lot lower because the market never really trusts those numbers, and so that kind of shut it through the market, as well as the trade concerns. So overall, the Asian markets were down, and that was reflected in our own market. We closed down 0.5%, down 44 points to 8,980. So we're we're back down against that, down below that 9,000. I've been away for a couple weeks, and I missed it all. Anyways, the New Zealand dollar is trading at 67.7 US cents, 91.2 Australian, and 51.1 British pence.
Nona Pelletier, lovely to have you back. Thanks, Nona.